Welcome to the Deep Dive. Today, we're looking at Motorsport Games, specifically their Q2 2025 earnings. And, well, the numbers suggest a pretty incredible turnaround.
Absolutely. It's a really interesting situation. You've got this microcap publisher. They reported on August 13th after the close, and management sounded, super optimistic.
Right, talking about explosive growth, a successful strategic shift.
Exactly. But then you look at the market reaction the next day, and it tells a different story. There's this immediate tension, this paradox between the great numbers and how investors actually responded.
Okay, let's get into those headline figures first, because they really do jump out. After selling off the NASCAR license, things really surged. Revenue hit, what was it, $2.592 million?
Yep, $2.592 million, which is up 37.7% compared to last year. Pretty strong top-line growth there.
And the profit picture looks even better, doesn't it? Net income was $4.24 million.
Which is, up 103% year over year. I mean, doubling your net income is, well, it's notable.
And the adjusted EBITDA figure really highlights the shift. It went from a loss last year.
A loss of about $500,000, $0.53 million.
To a positive $3.70 million this quarter. That's a massive swing. It feels like a fundamental change in the business.
It does. And look at the gross margin, too, 82.4%.
Right.
That's way up from 59% last year. So better revenue, better margins, positive EBITDA.
So everything looks fantastic on paper, which brings us back to your point, why did the stock drop the next day? And on higher volume, too.
Oh, yeah, the classic sell the news reaction. Yeah. It suggests investors were digging deeper than just those headline numbers. They were looking at the quality of those earnings.
Right. How much of that $4.24 million net income is actually from, sustainable, repeatable operations?
Exactly. Because in a turnaround story like this, the market gets really wary about one-off gains boosting the bottom line. They want to see core profitability.
Okay, so let's talk about that core profitability, because the company did hit a major milestone, income from operations for the first time ever.
That's the figure I think is more important, actually.
Yeah.
$2.0 million in operational income.
Why is that $2 million more significant than the $4.24 million net income, in your view?
Because...
Okay. So investors see that $0.8 million insurance money and basically ignore it when thinking about the future.
Pretty much, you have to mentally haircut that net income figure. It's cash in the door, which is good, but it doesn't signal ongoing commercial success. That explains a lot of the negative stock reaction.
Got it. A historic operational profit, but the overall net income was significantly boosted by one-offs. Let's look at cash then, because that seems crucial here. They ended Q2 with $2.4 million.
And by the end of July, so just after the quarter, it had ticked up slightly to $2.8 million.
Which isn't a huge amount of cash on hand, is it? Seems like they're running pretty lean.
Very lean. That $2.8 million reflects tight spending, sure, but also those settlement inflows helping out. It definitely raises the stakes for their next strategic moves. They don't have a massive cushion.
Which brings us nicely to the product strategy centered around Le Mans Ultimate. They launched version 1.0 on July 22nd, just after Q2 ended.
Right, and management made a point of saying that launch set new records for concurrent users and daily active users.
And interestingly, that happened after the big real-world Le Mans race in June. What does that tell you?
It suggests the game itself has appeal beyond just riding the coattails of the real event. The engagement isn't just tied to that one weekend in June. If usage peaks after the hype, the game features must be sticky.
And they've added things like team support and driver swaps.
Yeah, features that encourage community and longer play sessions. And they're planning a livery market, too, letting players trade custom car designs. That sounds like a potential microtransaction angle.
Right, building an ecosystem. And there's more content coming, the ELMS DLC.
European Le Mans Series DLC, expected by the end of Q3. So, yeah, they seem committed to a regular content cadence to keep players engaged. That's vital.
Absolutely. But the other big strategic piece is this shift towards software as a service, right, with the race control platform.
Yes, that's the part that could really change the investment profile. Moving away from just selling game copies to getting predictable, recurring subscription revenue. That's what gets investors excited.
And they threw out some pretty eye-popping SaaS metrics. Net monthly recurring revenue, MRR, grew how much in June?
Get this, 296% growth in June alone. For a service they only launched last December, that's worst. Well, that's explosive growth.
How do we know if that growth is good quality, though? Are they just churning users?
Good question. They mentioned their quick ratio, which measures new retained subscribers versus lost ones. It peaked at 4.66 in June. Management considers anything over 4 to be really significant growth.
So 4.66 implies it's very sticky. People are signing up and staying.
Exactly. It suggests users are finding real value in the platform and aren't just trying it and leaving. It's efficient growth.
Okay, so what does that translate to in actual dollars, ARR?
Annual recurring revenue was running at about $972,000 at the end of June. So almost $1 million a year in predictable revenue. That's a huge step for them.
And they brought back John Tibble as VP of Revenue and Growth to focus on this,
They
right?
did, clearly signaling that maximizing this subscription opportunity is a major priority.
Okay, so LMU momentum, SaaS growth. What's the next big lever? The console ports.
Yes, and this connects right back to that tight cash position we talked about. Getting LMU onto Xbox and PlayStation is key for expanding the audience.
They said they're in late-stage talks with a third-party studio.
Correct. But the really interesting part is how it might get funded. They mentioned discussions where a publisher could potentially fund the port development.
In exchange for publishing rights, presumably.
Exactly. And the key phrase was that this could provide Motorsport Games with a sizable upfront payment.
Okay, that's the potential game changer for the balance sheet.
Absolutely. It solves the immediate cash crunch, validates the LMU franchise for consoles, and takes a huge amount of risk off the table for MSGM. That one deal could completely change the narrative around the company's financial health.
And they also hinted at looking beyond sim racing eventually. Maybe another franchise.
Yeah, early days, but thinking about scaling beyond just LMU. Long-term diversification.
So, if you piece it all together, first operational profit ever, LMU doing well, explosive sauce metrics taking off, and a potential publisher deal that solves the cash issue. The turnaround story feels pretty compelling.
It does seem legitimate. The cost base is down, the core product is working, they got this growing sauce element.
So why is the market still, sitting on its hands, apparently? What are they waiting for?
Execution, pure and simple. They sold the Q2 results for, I think, 2 main reasons. First, that net income was inflated by the one-off insurance money. You can't bank on that happening again.
Right, the quality of earnings issue.
And second, there's still uncertainty about whether LMU can maintain this momentum long-term, especially without that big publisher deal locked in yet. For a micro-cap stock, investors are super sensitive to execution risk. They need to see that ELMS DLC land well, and critically, they need that console port funding announcement.
Okay, that makes sense. The uncertainty around that one big catalyst, the publisher deal, creates a specific kind of situation, especially in microcaps, which leads us to our next segment.
Time to throw the calculator out the window for a moment.
Exactly. This is where we explore an outrageous but plausible trade idea. Not financial advice, of course, just a thought experiment based on the situation.
Okay, so again, not financial advice, but thinking about the dynamics here. You've got tight cash, huge reliance on this potential publisher deal. The most interesting way to play that, purely theoretically, might involve options.
Specifically.
Long-term, out-of-the-money calls. OTM calls.
Why options instead of just buying the stock if you believe in the turnaround?
Because you're not just betting on the turnaround, you're betting on a specific event, the publisher deal announcement, causing a massive, potentially disproportionate spike in the stock price in a short period.
Ah, okay. Leverage.
Exactly. The stock's arguably depressed now due to that cash risk. If a publisher deal comes through with a sizable upfront payment, it instantly removes that risk and validates the whole strategy. For a tiny company like this, that news could trigger a huge repricing, maybe even a short squeeze. OTM calls offer nonlinear exposure to that kind of explosive move.
So the idea would be maybe calls expiring 6-9 months out, spring 2026, perhaps, to give time for that news to potentially land.
Something like that. You'd be looking for significant upside leverage if, and it's a big if, that catalyst hits. It's a bet purely on that strategic validation moment. High risk, high potential reward structure.
A very specific, high beta bet on management delivering that key de-risking deal.
Precisely. It hinges entirely on that one piece of news transforming the perception of the company's stability.
Okay, so let's quickly recap the core findings here. Motorsport Games delivered a milestone Q2 with its first ever operating income. The LMU strategy and the SaaS platform show real promise.
But the market's focused on the quality of that reported net income, filtering out the one-offs like the insurance settlement, and it's laser focused on the execution risk, especially around funding those crucial console ports.
Which leaves us with a final thought to chew on. Video gaming ETFs like ESPO have had a fantastic year, right? Up over 60%.
Yeah, the sector's been strong overall.
So the question is Is the market, in its current skepticism about MSGM's execution and balance sheet, potentially overlooking a high beta catch-up opportunity if they nail that console port deal and the SaaS growth continues?
It's the classic microcap dilemma, isn't it? High risk, but the potential leverage, if those specific catalysts materialize, is undeniable. Definitely something for people to watch closely.
Absolutely, a situation with clear potential catalysts ahead. Well, that's all the time we have for this deep dive. Remember, this discussion was purely for informational purposes. Always do your own research.
Thanks for tuning in.
We'll catch you on the next one.